man, another red day for cryptos. Jerome Powell slams crypto markets. Remember, markets were looking to see if January was just a blip. And Jerome Powell is sat in Congress testifying on inflation, on his monetary policy. And he's been speaking about more rate hikes and actually hiking for longer. I'm just sat here in the Binance offices in London catching up with the team here. But we need to get into the charts because we need to look at what is going on. Because remember, we were at a precarious level. And things are starting to get pretty nerve. Traditional markets. You can see the US markets are slightly red. You've got the Nasdaq down 0.7%, 0.9% on the S&P, and the Dow Jones down 0.7%. If you look at it, Jerome Powell coming out saying interest rates are likely to be higher than previously anticipated. We need to focus here on this bit. The latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated. Guys, if you look at the Fed funds rate, first it was sitting at about 5.9. Then it notched up to 5.1. Now we're looking at 5.25 to 5.5. What does this mean for the Bitcoin chart?
Although inflation has been moderating in recent months, the process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. As I mentioned, the latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated. If the totality of the data were to indicate that faster tightening is warranted, we'd be prepared to increase the pace of rate hikes. Restoring price stability will likely require that we maintain a restrictive stance of monetary policy for some time. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done.
Bitcoin chart, you can see now we were trying to create this higher low. We're still in play for it, but things aren't looking good. We had this doji candle here on Saturday. Sunday gave us a green day. Yesterday in the red, slightly call it flat, and today so far down 0.34. Now the dip is being bought. We are seeing some strength at this level, but if we are going to show strength, we need to push up to 24,000 and then work our way for a higher high past where we got rejected at 25. Remember, if we bring out our EMA ribbon, you can see things are really starting to get nervy here, guys. If we lose this EMA ribbon, it's not going to be great on the daily chart. If we notch that up to the weekly chart, you will notice another problem, and that is we are now officially getting rejected by the top of the weekly EMA ribbon. This was always the fear, right? Until we regain this weekly EMA ribbon, we are still in a bear market. We are still in a downtrend. The bears still own the trend. All we've done is run into our EMA ribbon, and we've had 2 weeks so far of negative to the downside. Will this third week be negative? Here in the Binance London office with the legend Alex from the marketing team. Alex, what's happening, man?
I'm all good, man. How you doing?
Yeah, not bad. Thank you for having me in your offices today.
Cheers. Thank you for coming.
No worries.
We've had a big event on today, School of Code with the Binance charity. First real event in the UK for this team. And Ijaz gratefully came onto our Binance live stream and gave us a little a bit of background into what he does and gave us some really valuable content for the coders and for the bootcamp team.
No, really good, Alex. Really enjoyed it. It was so good and refreshing to see from a Binance perspective how much is going on from a charity and altruistic point of view that we don't know about, right? We know crypto is all about profit. We know it's all about making money and gains, and everybody cares about their portfolios. But it's so refreshing to see what these guys are doing behind the scenes that often doesn't get the credit it deserves in terms of actually pushing some of this. We were looking at all the projects that you guys have just you've paid for them to go through a 16-week course learning to code. Insane.
Yeah. It's effectively a short-term university course for coding. So we put these guys through it, pay for everything. So the idea is that we really knock down these barriers that people have to get into coding education right now. We want blockchain and Web3 to be open to everyone, not just the ones with money.
Awesome. And Alex has been kind enough to give us a bunch of Binance swag. So if you want hats, bags, hoodies, t-shirts like this, which were for the Ronaldo NFT collection, Cristiano Ronaldo, yes, we're going to be doing a giveaway. So make sure you subscribe, make sure you look out for the notifications, and we'll be posting those out to the lucky winners. Alex, thanks for having me, man.
Cheers, man. Thank you.
Big bounce here off the EMA ribbon here for the dollar index. A strong day, almost a 1% day hit. And this is not good. Remember, it's inversely correlated to crypto. We do not want risk rotating off. That means money will be flowing away from crypto. And that is what we're seeing here today with Jerome Powell's latest remarks. If we also take a look at the US 10-year, which is the risk-free rate. You could see here another green day here. This is showing a nice trend now on its daily chart, right? It's trying to break upwards into an upwards trend. Similarly with the dollar index, you can see here trying to reclaim its EMA ribbon and bounce to go work its way back up to highs. If you notch this up to the weekly, you will start to see it's trying to get its weekly EMA ribbon back, which is not a good look. Today's testimony was not good, guys. It is not good news. Remember, we were hoping the bull case was saying that January is just a blip, nothing to worry about. Why should we be stressed, right? January is a blip, seasonal adjustments will crack on, Fed inflation data will come back better. It'll show that the Fed is on top of it. Disinflation process has started. But Jerome Powell's not come out in that vein. Jerome Powell's come out saying the opposite, that maybe the disinflation that we saw toward the end of 2022 is showing signs of halting. Maybe inflation's more stubborn than we thought. We did not want to hear this from Jerome Powell. We wanted to hear that he was steadfast, that he was focused, that he was going to say, no, it's a blip. We're going to stay the course. We're on top of everything. But we've not got that. So markets are now going to be worried. Markets are going to be worried that inflation could be entrenched, it could be sticky, and we could be in for much more rate hikes and for longer. If you go check out the Fed rate monitor tool now, the majority of the market, remember we were watching it was like 10%, 15%, it worked its way up to 30%. Now over 50% of the market, after what Jerome Powell just said, are pricing in 50 basis points at the meeting on March the 22nd. That's the next FOMC meeting. Mark your calendars. Jerome Powell speaks again tomorrow. On Friday, we get the non-farm payrolls. That's the Fed data. Really important. Look at the wage growth. We'll look at that together. Then on the 14th, we get the CPI data. After the CPI data on 14th,